we're on.
Hey, welcome everyone. On behalf of the Global NPO Coalition on FATF, I am happy to welcome you to this webinar, Nonprofits in Search of Financial Access, Real Problems, Real Solutions. I am Kay Gannan, co-chair of the coalition, serving along with Leah Van Breckhoven from the Human Security Collective. The Global Coalition works to ensure that civil society is effectively engaged in the debate on anti-money laundering and combating terrorist financing. Our vision is to have a free and fully enabled civil society operating space. Today we will hear about two studies published this year that address an issue that affects civil society operational space and are of great concern to the coalition: adequate access to financial services for nonprofits working at the international level. These studies demonstrate the wide scope of the problem affecting NPOs on both the sending and receiving end of transactions. We will have two co-authors describe the findings and recommendations from each study, followed by Emile van der de Willebos from the World Bank to describe a multi-stakeholder dialogue working towards solutions. There will be time for Q&A after the presentations. This webinar is being recorded and will be posted on the Coalition website, fatfplatform.org. Now, for the first study from the Charity and Security Network, Financial Access for U.S. Nonprofits. Andrea Hall, Communications and Outreach Coordinator at CSN, will present the findings. Thank you, Andrea.
Thanks, Kay. I just wanted to start off by briefly summarizing the methodology of our report. We obtained both quantitative and qualitative data for this study. The quantitative data was drawn from random sample surveys drawn from a universe of 8,665 U.S.-based nonprofit organizations that do international work. These groups were identified by their IRS filings. We hired a data center at a university to conduct telephone interviews with these groups, and they were able to complete 305 interviews with the financial officers or executives of these nonprofits. That gave us a response rate of 38% and made our findings valid within a 5.4% margin of error. The qualitative data, or some say the meat on the bones, was derived through focus groups, roundtables, and interviews with various stakeholders, including government, the financial sector, and nonprofit groups. Although we knew going in that there was a problem, that NPOs were facing difficulties accessing banking services to do their international work, we had no idea how widespread the problem was. Our data showed that 68%, more than two-thirds of nonprofits based in the U.S. that conduct international work are experiencing obstacles in accessing financial services. More than 15% of these NPOs encounter the financial access problems constantly or regularly, with another 31% reporting occasional problems. As you can see from this graph, the most prevalent problem experienced by NPOs is the delay of wire transfers, with almost 37% of organizations reporting that they have encountered this. When we talk about delayed transfers, it's not merely a matter of hours or even the next day. As we talk to various nonprofit groups in our stakeholder meetings and focus groups, we found that delays can last weeks and even months at times, which of course has a significant impact on programming. The other two most frequently cited problems are fee increases and unusual additional information. The fee increases really didn't come as a huge surprise because as we talked to financial institutions, we repeatedly heard that they're facing increased compliance costs. And as is the case with many industries, those costs are passed along to consumers. At the top of the table, you'll see that account closures happen to 6.3% of nonprofits and another 10% faced account refusals. These may look like small numbers, but these are in fact significant problems. When an organization is told they have 30 days to move their money with no explanation given and no opportunity to correct perceived defects, this is really a daunting scenario as a group scrambles to find banking access that they can continue to fund their programs in foreign countries. And as we talked in stakeholder groups with these organizations, we found that many organizations have had accounts closed again and again, so it's not just a one-time problem. One interesting piece of data that we wanted to share with you is that U.S. nonprofits that receive U.S. government funding are in no way shielded from financial access difficulties. And in fact, as you can see over to the left, when it comes to account closures and refusals to open accounts, groups receiving U.S. government funding are in fact having greater difficulty than their counterparts who do not receive that funding. One of the items we wanted to puzzle out with the data was whether faith-based organizations were suffering a disproportionate impact of these problems. And as this table shows, that faith-based and secular organizations experience financial access difficulties at roughly the same rate. One thing that we did hear about anecdotally before we engaged in this study, we heard from a number of organizations that self-identified as Muslim charities that they were having problems with account closures in particular, and also with delayed wire transfers. So we wanted to find out from the survey if that really played out over the whole. Unfortunately, in the sample that we drew, only 3 organizations self-identified as Muslim charities. So there weren't enough in the pool to find out if this is a significant problem for these groups, but this is an area for further study. We, and I think many others, assumed going into this study that the delayed wire transfers would be those that were headed for global hotspots, such as the Middle East and North Africa. And as you can see from this pie chart, the problem is far more widespread and literally affects every corner of the globe. While 10% of the delayed wire transfers are destined for the Middle East and North Africa, you can see that 19% are destined for East Asia and the Pacific, another 19% to Europe, and another 19% to sub-Saharan Africa. But there are also problems with transfers headed to South America, North America, and Central America, and Russia as well. Finally, it's useful to note that even though banks may de-risk charities and other nonprofits, charities typically do not de-risk their beneficiaries. As this table shows, only 3% of nonprofits faced cancellation of their programs when they felt they had no other option and couldn't get money to their programs overseas. Most of the time, 67% of nonprofits reported that they were able to perform a transaction successfully later on. Again, these are often not hours or a couple days delay. We're looking at weeks and months at times, which again impacts programming significantly. About a third of nonprofits are looking to use money remitters, such as Western Union or other outfits that could substitute for the traditional banking channels that they've used all along. But the most disturbing number here is at the top. 42% of nonprofits report that they've carried cash across borders when they felt they had no other option. And that is, in fact, a situation, as we talked about, where they tried everything else. And as you can imagine, this does move money into less transparent channels and increase the risk of that money falling into the hands of the bad guys, as well as risking the programs themselves and the nonprofit staff, where there have been instances where people are robbed and beaten for the money. So this is a problem that needs to be considered when solutions are crafted. I want to hand it over to Sue Eckert, the primary author of our study, who's going to discuss recommendations and observations. Sue, you can go ahead.
Good morning, and thanks very much to the Coalition for organizing this webinar. It's an incredibly important problem that we're confronting, and I think the 2 studies add much to the debate, and so the recommendations are what we want to focus on now going forward. The first is that we really need a multi-stakeholder dialogue. In the many discussions that we had with stakeholders, and this is the financial community, nonprofits, and government, both regulatory and policy makers, there was a frustration and a lack of specific dialogues going on in which everybody was part and parcel of it. So part of the initiative and part of what we wanted to do was to focus on how do you create a sustained dialogue among all stakeholders. We were very fortunate that the World Bank, who had done very excellent studies on correspondent banking aspect of de-risking as well as money service remitters, took up a year ago a process to bring stakeholders together to talk about the broader de-risking issue. I'm not going to get into the stakeholder dialogue part of this because Emil will address that as part of his comments, But needless to say, it has been a very useful and very hopeful channel for a number of these issues to be addressed. But we don't want to, in doing so, and having both the World Bank and ACAMS is the Association of Certified Anti-Money Laundering Specialists. Those are basically the compliance people in banks, largely. We don't want those two organizations, while it's been very helpful, they're not the ones that bear primary responsibility. We still believe that governments, in particular the U.S. government on our report, bears the primary responsibility for bringing together people and addressing these issues on a collective basis. The second recommendation that we had after that was actually to focus on updating the specific guidance that examiners, bank examiners, use to assess banks' compliance with nonprofits. This is very important because banks are looking at what their regulators, responding to what the regulators are asking them to do. Currently, there is a section of the Bank Examination Manual dealing with nonprofits. It has not been updated to reflect the June 2016 changes by the Financial Action Task Force, nor has it provided any additional guidance to banks about the kind of assessments that they want to see take place. This is very important because without that, banks have nothing to look to about any kind of changed characterization of the risk associated with nonprofits. And as the FATF has noted in its changed recommendations and its guidance, there is not, nonprofits are not particularly vulnerable at this particular point, and there's differentiations among types of nonprofits, the kind of work that they do and risk associated with that. And finally, the most important thing is that all of these things with a risk-based approach can be managed. Just because it's a nonprofit dealing with in an area of higher risk doesn't mean that it's automatically a customer which should be avoided or additional provisions need to be provided. So the whole point here is that we really need to change the regulatory basis which the examiners use. And that, again, is part of the World Bank work stream, and Emil can talk a little bit about that as well. The third area that we're focused on is how do you help banks learn about nonprofits and help their due diligence process? How do you make information available? There is some precedent for this. There is NGO Source, which provides information about for grant makers for equivalency determinations of foreign recipients. This is something that is being used, technology tools are increasingly being used for compliance. We have a number of due diligence technology tools called utilities that are used now for Know Your Customer, and the point here is to actually centralize information about these nonprofits so banks have an easier time of understanding what kind of compliance systems are in place and makes their process easier. This is something that, based on the work streams, we will be looking at, but it is something which I think has a great deal of promise. The fourth item is that in certain circumstances, when the international financial system just is unable to meet the needs of nonprofits in getting humanitarian assistance into areas of special need, that there has to be some kind of special procedures which can help facilitate the transfer of funds, whether it's a government or an international or an agency or a regional or a development bank, or even perhaps the UN. There has to be extraordinary measures taken when there are extraordinary humanitarian needs that need to be met, and the banking system is unable to do that. This is something that is starting to be explored, but as we've seen in the case of Syria, and now with the impending and they're ongoing right now, the famine, which is growing in places in Africa and Yemen and Somalia and South Sudan and Sudan, etc., we have a dire situation in which human lives are at risk, and we have to take special measures to address those needs. The next are categories that I only briefly address, and that is that for banks who have in place very good, adequate due diligence procedures, no system is foolproof, and there could be times in which funds happen to get to somebody who it wasn't intended to. So if they have in place adequate due diligence and go the extra mile to try to make sure that their systems are as effective as possible, there should be some kind of protection for them if there are inadvertent violations. This is something, it's analogous that there is a safe harbor for banks providing information to government in terms of suspicious activity reports, but it's not something which government has clearly not taking the lead on and has some issues with, but something that we felt was worthwhile that would help enable banks to bank more NPOs if they had some kind of greater assurances. The next category really falls in this case of a risk-based approach. And while the system is supposedly based on risk-based approach, there are a number of issues and ways in which it needs to be strengthened. The particularly vulnerable is the one that I addressed previously about what the FATF is doing, but there is a need to develop greater guidance and standards to reduce uncertainty, to promote information sharing, and to really increase incentives for financial institutions to take and engage in appropriate risk management regarding NPOs. The next item is really that there are potentially, and there are ways out there, informal networks, informal value transfer systems, or alternatives such as virtual currencies, Bitcoin, etc., and that those ought to be explored as alternatives to move funds to areas of NPO activity. And the final is that with the data that we've gathered, we're just scratching the surface. We're understanding better what nonprofits do and how they operate in a number of these areas, but there's much more that needs to be done. And the database that we have developed, I think, will provide very useful information for additional research, and we lay out a whole course of additional questions, research questions, that should be pursued. So finally, let me just say, in terms of the report that the Charity and Security Network sponsored, it is something, this was supported by the Gates Foundation, but we very much believe that, that these items, that these issues, first of all, we really need to recognize that there is a problem and that it's in all stakeholders' interest to address it. And secondly, what we need to recognize is that financial integrity, which is what the AML-CFT system is all about, trying to ensure that funds don't go to places that are unintended, to bad users such as terrorists, that system is not inconsistent with financial inclusion. And in fact, as former Secretary of Treasury Jack Lew said, financial integrity and inclusion, they're not a conflict of interest, but rather a need to bring together two parallel interests. And with that, I'll stop and look forward to questions.
Hey, thank you very much, Sue. Next, we'll be hearing from Isabel Gooskins, Director of the Women's Peacemaker Program, and Jane Huckerby, Director of Duke University Law School's Human Rights Clinic, about their study, Tightening the Purse Strings, what countering terrorist financing means to gender equality and security. So Isabel, I believe you'll come on first.
Okay, Jane will come in first, and I will do the second half. Okay.
Okay.
Yes.
All right, thank you.
Thank you, Kay, and thank you also to the Coalition for organising this very important webinar. And on behalf of Duke University International Human Rights Clinic and Women Peacemakers Program, we're delighted to be able to present the core findings of our report, which is very complementary to the report that we've just heard on really looking at, in particular, how counterterrorism financing rules impact on women's rights organizing, women's rights organizations, and gender equality worldwide. And to say that we particularly, in doing this report and methodology, had sort of two core components. The first of which is a survey that he conducted of 60 primarily grassroots women's rights organizations working in all regions and in 61 countries, and the majority of which are in conflict or post-conflict areas. Alongside those surveys, the clinic here at Duke conducted in-depth interviews with 53 different organizations or agencies, and these were groups that were from government, a range of intergovernmental organizations, NGOs, donors, financial institutions, and academics to really try and identify the ways in which counterterrorism financing rules may impact different types of actors and stakeholders within civil society differently. The overall finding is that as a direct and indirect consequence of these rules, that women's rights organizations have lost access to critical finance resources, as well as the ability to fully use the banking facilities. In particular, what was very stark is the ways in which these counterterrorism financing rules are actually really squeezing women's rights organizations between terrorism on the one hand and counterterrorism efforts on the other. And in particular, as you see on the slide here, 86.67% of surveyed organizations believe that their organizations work in the areas of peace building, promotion of rule of law, human rights and development, contributed to the effort to combat violent extremism and terrorism. Yet, at the same time, 90% indicated that counterterrorism measures had an adverse impact, and that squeezing effect is particularly acute and particularly important in light of recent efforts of governments to increasingly engage women and mainstream gender and preventing violent extremism. To sort of jump a little bit forward and to, often we get asked, well, what is it about women's organizations that particularly makes them susceptible to experiencing the impact of these counterterrorism financing rules? And there are a number of features, the small size, low financial resilience, the fact that women's groups receive short-term project-based funding rather than multi-year core flexible funding that inherently circumscribes their capacity to develop compliance and other sort of resource needs to meet the requirements of CTF. In particular, women's groups are reliant on foreign funding, particularly in conflict and post-conflict settings, meaning that rules that regulate transnational flows, such as counterterrorism financing rules, have particular impacts on their funding streams. Women's rights groups work at the grassroots level and often new or emerging, again making them look very risky to donors, banks and governments who operate in environments of increasingly lowering risk appetite. Finally, and just two quick points before we go into the impacts, what was very stark from the surveys and from their interviews is that women's groups are really working in very often insecure and repressive environments, under threat from both government and non-government actors, in contexts where they're often labelled terrorist by their own repressive governments. And that label of terrorism, creates a vicious feedback loop where they're then placed outside the appetite of banks and donors at the very moment which they need it the most. Women's groups that we talk to also often work on controversial issues and are very reluctant, for example, to provide beneficiary information when that's requested by overzealous financial institutions and authorities. The 5 core impacts. Number 1 is using CTF to reduce resource and operating space. And number 2 is to have impacts on the programmatic partner and beneficiaries with whom women's groups work. The third area of impact relates very much to the study that the Charity and Security Network has released, which is really the financial exclusion and restrictions on access to resources. The fourth area is prohibitive costs of due diligence and other administrative burdens. And the final area is insecurity, and also what we heard from Andrea, a range of adaptive measures that women's groups undertake to continue their work. In terms of the first impact, 48.33% of groups, and nearly half, reported that the demands of CTF had impacted their access to resources. In particular, we have a very high number of women's groups that have not applied for certain grants. Again, in an environment in which women's groups are resource strapped and have low financial resilience, they simply do not apply for these grants due to CTF demands. And actually, even those that do apply and are offered, 16.67 turn down these much needed funds out of either principled or practical concerns. Andrew, you can just keep pressing, it will come up. And just to give an example, you know, that in the second quote there, that I think we need to address that governments and donors, that terrorists have different ways and NGOs of operating. They limit our access to funds and our ability to work. Andrew, do you mind keeping on going through? So what were the core programmatic partner and beneficiary impacts? Echoing the findings, as Andrea mentioned, really that there was incredible impact on the ability of women's groups working in at-risk areas and communities to do their work. So donors refusing to send the money, banks refusing to transfer the funds, really in these areas. In particular, what was very important is there were significant impacts on women and girls as beneficiaries. So if you can't get humanitarian assistance to, for example, areas they're experiencing famine or areas of conflict, that has adverse impacts on women and girls. There's not a gender neutral effect. You know, for example, in the context of Al-Shabaab in Somalia, this meant that women and girls who in areas under control of Al-Shabaab, where money was cut off due to US government restrictions primarily, are then reliant upon terrorist entities for service provision. We also saw in our study a reluctance and concern of donors and governments and frankly organizations to do work with female victims of terrorism and violent extremism out of concern about whether or not these individuals actually, you know, may themselves potentially be treated as criminals and therefore put organizations afoul of material support laws. We also saw a lot of challenges around supporting female formers and so forth. Again, challenges of governments in thinking that supporting disengagement, rehabilitation, reintegration programs might actually be a problem. And there's some quotes there that particularly, you know, that women's groups reflected upon is that, you know, that you cannot send money to where it's most needed, and as a result, women's organizations suffer. Isabel?
Okay. All right. So here also you see particularly the last quotes where some of the women groups in South Asia were sharing how donors are putting more difficult requirements up, which means that they see that smaller organizations cannot apply anymore, that it's mainly bigger international organizations who have access to funds, and that they think that this is related to counterterrorism regulations. And basically what they're saying is the minimum amounts that are put up for civil society organizations are really too high, so many times we just really cannot have any access anymore. Andrea, if you could go to the next slide. And another one important quote is from a group who's working in Syria, who says we're working in areas under ISIS control with women who are providing secular education to children to counter the ISIS from schools, and they're sharing how donors do not want to support those kind of small community-run projects, which are ultimately very important also to stop stop terrorism and to fight extremism. And they talk here particularly on how U.S. government has stopped to support those kind of programs, which are really important to the women who are contributing to resilience on the ground. So that takes us to the next financial access impact, which was a third impact that we found in our research. What we could see is that countering terrorism financing is really overrunning the financial inclusion goal. And it's very important that we look here at de-risking beyond just the closure of accounts, but it takes a whole range of manifestations which have quite an impact on women's rights organizations, which I will elaborate a little bit later. First of all, 56.67% said that they are facing delays in or not receiving funds from their donors, which is a huge challenge if you're a small women's rights organization who does not have large reserves. So it really means literally if you have to wait for months, you can't implement a program, and for some organizations, if they have no other funding or just minimal funds, they might even have to close shop altogether. 56.67 mentioned that they are getting requests for project information from the banks before funds are being released. And what they shared is that they're concerned about this because it can ask information about beneficiaries, who's involved in the project, and specifically if you're doing very sensitive projects around sexual violence or domestic violence, they're really concerned by concerns by women's groups about privacy. 50% mentioned that they're facing government limits on transfers of funds. Again, if you have a 50,000 fund that you're awaiting and it only comes in chunks of 5,000, if you have no reserves, that really undermines how the efficiency and of your program, and even if you can do it altogether in some cases. Then we had 30% talking about refusal of banks to transfer cash to other countries. Again, several of the women's groups were working in a networking setting, which means that they can't get money to their members who are operating in other countries. Then we see requests for information from security and intelligence agencies, also where several groups mentioned sometimes the lines between bank, government-owned bank, and intelligence agencies are really blurred. So that means that they know that the information that they provide are going up into different circles. Then there's the refusal of banks to release funds, and 16%, over 16% shared refusal of banks to open a bank account for their organization. Again, that can be very direct refusal, but it can also be more indirectly because the kind of requirements that organizations need to fulfill to get a bank account are so difficult that they just give up altogether. As you can see here, it was only in our survey 3.33% who actually experienced the closure of accounts. And overall, what we could see in terms of de-risking was that small women's organizations who work in conflict zone are seen as high-risk clients by banks who see little incentive to provide them with services. And many of these groups, because they operate far away from financial centers, under a lot of pressure, also don't have always the capacity to go into negotiation with their banks so that they are more light on them. I want to go a little bit to the next point, which is another major impact that groups report, which is prohibitive cost of due diligence and other administrative burdens. Now, 85% mentioned that they've noticed increased demands on their organizations, administrative burdens coming to them in terms of meeting compliance conditions. And when we asked where are these demands coming from, they identify donors, as you see, 61.67%, government and banks. What does that mean? As Jane also mentioned, several times they will not apply for funds from donors with high compliance demands. Also small organizations, they have little resources and they will not be able to hire extra staff or pay for lawyers to deal with the compliance demands, which has to do also with the fact that they mainly get project-based funding, so they don't have core funds that they can use to build this aspect of their organizations. Many women also mentioned that it's really overloading them as they're already doing difficult work in very sensitive areas with a lot of stress. So this adds to the stress and takes them away from their work in the field. And some mentioned how they can see that donors are really favoring bigger organizations. Some mentioned still some want to work with us, but they then don't want to mention us, which again does not contribute to their visibility, which helps them get, again, funding from other donors and even have banks, see that these are legitimate organizations. All in all, it's leading to insecurity and also adaptive measures that women are using. 15% of the women's groups we surveyed experienced harassment and prosecution under CTF measures, which could be government coming into their offices, raiding their offices, or asking extensive audits, overloading them with administrative requests, threatening to close their organizations. However, if you can see on the other side, 60% said that they're really concerned about prosecution and adding a lot of stress to the organization. And in terms of creativity, which women's groups have and always had to be able to do their work, these were the measures they are turning to. As you can see, 53% is carrying cash. 23%.33 is using accounts of other organizations. Some use other adaptive measures such as using Western Union, stopping their projects, rewording their projects, registering also as a private company to avoid all the NGO regulations. Some are using foreign and private bank accounts or accounts of family and friends. Now ultimately these are measures they are using, but at the same time it is heightening the risk for women's organizations, as also was mentioned before, when they're carrying cash in areas that are in conflict and when there's terrorist actors around. That means that they can face violence, but also government could look at that as being very dodgy and crack down on them. And basically, as we spoke to the organizations and asked them, what is this doing to you? Several really mentioned this is all contributing to high levels of stress in the organizations, which sometimes translated into finding it difficult to keep the staff. Some internalized this as becoming insecure about their professionality, and several said there are quite a number of burnout cases in their organizations. So with this, I quickly want to see, also keeping in mind of time, whether Jane could quickly go into the human rights framework that we found particularly important to use when doing our research and analyzing the data that we had.
Yeah, thank you, Isabel. You know, what's particularly important in this report was to anchor these effects in the International Human Rights Framework, to really emphasize that these are not mere inconveniences, but actually implicate states' obligations under international human rights law. So while states have an obligation to prevent terrorism financing flows, it must be in a way that's human rights compliant. And the particular rights that were implicated were the requirement of states to prohibit discrimination, to ensure equality, including an access to financial services, to ensure the freedom of association, assembly and expression, and to do so on the basis of non-discrimination, and to ensure that, you know, particularly that women's rights organizations are able to participate in policies aimed at countering terrorism financing in terms of their formation and their evaluation. You know, also to emphasize that governments, you know, are not able to merely deputize banks to do this particular you know, sort of work in regulating women's organizations, but actually have an obligation to prevent, investigate and punish any activities by financial institutions that cut off money to women's groups. And finally, you know, to really emphasize that where the women's rights organizations have been deprived of access to funding and therefore have been deprived of their freedom of association and assembly, that governments are required to remedy that. There are other human rights obligations that maybe we can have on the screen, Andrea, but really, you know, emphasizing again that these, you know, need to be implemented alongside government actions to prevent terrorism financing flows.
Thank you very much, Isabel and Jane, for that overview. It's very sobering to see what the impacts of the financial excess problem is having on organizations on the ground, and makes it all the more important that the stakeholders collectively do something about that. So we are fortunate to have with us to address that issue is Emile van der de Willebos of the World Bank. He is a lead financial sector specialist and global lead on financial markets integrity. So Emile, you're ready to please join us. Thank you.
Good morning to everyone connecting from the US, and good afternoon to those connecting from elsewhere in the world. And thank you to the Global Coalition on the FATF for inviting us to talk about this issue. Very important issue to the World Bank, and we really come at this from two different angles. I've been at the bank here in the Financial Market Integrity Unit for the last 12 years, and we try and assist countries in implementing proportionate and risk-based AML, CFT systems, and try and make sure that when they implement financial integrity into their systems, they do not overzealously exclude those who are more vulnerable and those who are maybe not always able to provide all the due diligence requirements. So really focusing on risk basis and making sure that those who pose a low risk, as many poor people do, and as many people who have low value bank accounts or who have small types of organizations that really don't have much international exposure, make sure that they are included and not not excluded by overly broad due diligence requirements. And in that context, we've always had a particular eye for recommendation 8, the recommendation of the Financial Action Task Force that deals with non-profit organizations, and making sure that when countries implement that recommendation, they don't do so in a blanket way and make it hard for all non-profit organizations in their jurisdiction to open a bank account or to move funds. But that the country really does a risk assessment up front and says, okay, well, there may be some issues in this part of the sector, maybe that's where we want to focus our efforts, and not by blanket regulation constrain the whole sector. And in that context, a couple of years ago when FATF was revising its standards and revising its methodology, we made sure that one of the criteria that an assessor would have to take into account when evaluating this particular criterion or this particular recommendation would be that they would have to make sure that whatever the country was doing on recommendation 8 would not hamper or disrupt legitimate charitable activity, and that if the country was implementing it in such a way, that would be cause for a downgrade. And so although we haven't been thoroughly successful in implementing that, that is now in the standard and that is now in the methodology, and we have more work to do to make sure that everyone is aware of that. So that's one angle from which we come in, and the next one is more closely related to the topic here, which is de-risking. We were asked a number of years ago, 3 years ago in fact, by the FSB, the Financial Stability Board, which is basically the international community's response to the G20 response, in fact, to the global financial crisis. Founded in 2009 and dealing with reform on the financial markets following the global financial crisis. They asked the World Bank to do a study on de-risking. At that stage in late 2014, there were a lot of rumors out there, banks are closing off relationships. Is this really happening? To what extent? What countries are being affected? And so on and so forth. So we did a big study on correspondent banking and the extent to which correspondent banking channels were being affected by decisions in large correspondent banks, large clearing banks, like US, European banks that cleared US dollars or euros or pounds or Swiss francs, and the extent to which they were closing down the access for smaller banks all around the world to the US dollar system or to the euro clearing system. And I won't go, for the sake of time, I won't go into the details of that report, but long story short, yes, we found that there were significant parts of the world that were being affected by that. That's to say, banks in many jurisdictions around the world, both in sort of terrorist hotspots, but also, smaller offshore jurisdictions or smaller jurisdictions, tout court, were being affected by decisions by large banks to de-risk them, and that in turn was having an effect on remittance companies, access to financial services, trade finance, those seeking trade finance, and charitable and humanitarian organizations. And as a development organization, we care about financial inclusion and making sure that all those around the world that need access to financial services indeed have it. and that's why, you know, de-risking, after we'd done this report for the FSB and it was then presented to a G20 summit late in 2015, we then took this work forward. And one of the main recommendations, and Sue already highlighted that in her presentation, one of the main recommendations coming from our report was, you know, there needs to be, in the de-risking debate generally, it's been, certainly until that stage, it was very much a debate of one actor blaming another. You know, the banks would say it was the regulators would be saying it's the banks, or would be saying it's, you know, the regulators in other countries that are not doing enough on AML-CFT, and everyone was sort of passing the buck. And so one way to try and cut through that is by having a large coalition of really everyone, all stakeholders, you know, banks, both correspondent banks, respondent banks, regulators, again, American regulators, but also the regulators from the Caribbean or West Bank and Gaza or whoever, policymakers, charities, remittances. And so we brought all those together in the stakeholder dialogue that Sue already mentioned about a year ago, and had a, you know, 2-day discussion on de-risking issues. And the really feeling in the room then was, okay, you know, there are a lot of problems that maybe as a stakeholder dialogue, and again, it was the World Bank and ACAMS, the Association of Certified Anti-Money Laundering Specialists, that brought this dialogue together. The feeling in the room was that it was one of the issues that maybe we could make some headway on was exactly this topic of humanitarian organizations and charities, and trying to make sure that they do have access. And it was particularly the banks actually that pushed for it. They said, well, this must be one, you know, we can't solve the world's problems, we can't solve all correspondent problems, but we should be able to make some headway on that. And with that sort of impetus, we launched the work streams on work streams on de-risking of charitable organizations that Sue already highlighted. So we have 4 work streams under that. The first one you see here, facilitating information exchange. That's a two-way thing. It's both making sure that banks have better information and more in-depth understanding of what non-profits do and what sort of measures they have in place to mitigate their risks, how they oversee their operations, how they conduct programmatic verification. And on the other hand, it's also about NPOs understanding better, okay, why do the banks need all this information? You know, what do they typically need? And so one of the things we're trying to do on that, and you can see the bullet points here, one of the things we're going to try and up with is a sort of core list of things that, a core due diligence list, if you will, that banks are interested in, and then going so that, you know, NPOs widely have an understanding, okay, this is the sort of information we should have readily available to be able to access financial services. It doesn't mean that it will be only that. Banks will typically have a few particular things that they will ask themselves, but it should facilitate in the first place. Then if you could go to the next slide, please, Andrea. And then building on that, and again, Sue has mentioned this already, creating an NPO utility. The idea being, if banks can easily get information on a non-profit, for instance, by a utility, a repository that has all the relevant information without having to go through that themselves, that should decrease the cost of establishing a relationship and therefore make it more attractive for banks. Because one of the arguments throughout the whole de-risking debate is it's too expensive, given the risk that these entities pose, it's too expensive for us to do all the due diligence. And, you know, if you look at what those relationships bring in, it's too low, the cost benefit is out of whack, therefore we're closing the business. The idea is about creating an NPO utility you can decrease cost, thereby make it more attractive for banks to establish the relationship. The next one, clarifying regulatory requirements and risk-based guidance. Again, Sue has mentioned this already. We're at the just a few weeks ago we had a meeting with US regulatory authorities to see to what extent we could amend or propose amendments to the on-site supervisory manual to more accurately reflect what's going on in the non-profit sector, and to make sure that bank examiners don't always enter a bank thinking, okay, you know, non-profits are all high risk, therefore I need to zero in on that, and to take a more realistic approach to that. And so part of that is also raising awareness, educating regulatory and supervisory authorities how that goes. And then finally, the last work stream is on enhancing communication and outreach and providing more information, distribute information more widely on how banks can get information on NPOs and facilitate greater financial access to banks. So thank you for that. I'm sorry I've slightly gone over my time.
Thank you very much, Emil. It's wonderful to know that there's a process going on to address the problems that have been raised in this webinar. At this point, we want to open it up to questions and comments from participants. I believe the first comment we have is from Florence Keane with the Royal United Services Institute in the UK. Okay, Florence, are you there? I think Andrew is going to unmute you.
She should be unmuted now. So.
Okay, Florence? Okay, while we're waiting for Florence to come on, are there other questions that people have for any of the panelists?
You should be able to see a question pane on the dashboard that you have in your webinar. If you open that question pane up, there's a place to type. Florence says I'm speaking, but it doesn't seem to be working. Maybe she's self-muted.
Okay, well, while we're waiting for Florence to come on, I have a question for the panelists, which for each study, what has been government's response to this information, and what are the prospects for progress there? The report authors want to tackle that one? You have to take yourself off mute.
Okay, it's Sue, and I'm happy to just report from the perspective of our report so far. I think it's been very had with the regulators of how willing they were to come and to learn about the nonprofit sector and the kind of things that the concerns that existed. I think to this point there's been before these studies, there's been a healthy degree of skepticism as the degree of the problem. The government, at least speaking from the perspective of the U.S., heard that there were problems or issues, but they were primarily anecdotal. So with these two studies, now you have the first bit of data on the nature of the problem and the extent of the problem. And the 2/3 of all NPOs that our study came out with was, I think, quite shocking to everyone, as well as the notion that, that charities to deal with this are carrying cash. This is not something, you know, that governments like to see from the perspective of safety of the charities, but also transparency and the objectives of the AML-CFT system. So I think that there is a growing recognition of the problem, but unfortunately we need to do a lot more to educate people about the nature of the problem and potential solutions.
Jane or Isabel, would you comment on that question?
So Isabel, maybe I can start, and then you could also jump in. I would totally echo what Sue just said, that the incredibly important educative function of both of these studies cannot be understated. You know, there had been anecdotal discussions of the impact. I think also the focus had been very much on impacts on larger organizations rather than really identifying how this manifested in small and grassroots organizations. And so, you know, in terms of assessing the response, for us it's really been presenting this information and performing this sort of educative function not only with governments but also with intergovernmental organizations, with donors and with other civil society. And I think moving forward that building on further on this evidence base is important, and really sort of amplifying these effects is really important too.
Yeah, and I would like to add to that for as we were doing the interviews and we're analyzing the data, one thing that really came up was that women's organizations have been seeing things change, and for them understanding what is actually happening and having the data is really important. That is also some of the feedback that we're getting on this report. It helps them to understand where it's coming from, to also see it's not just something that comes from one level, but it's multiple levels. And they've really indicated that for them it's about a need to understand, so in that sense capacity building, but also to be engaged, actively engaged in the advocacy. And that means that the women's groups need to be able to access those spaces, such as, for example, the Financial Action Task Force, but also initiatives that are right now being developed to address these problems, to really be there, to listen to it, but also share their experiences and make sure that the solutions that are being developed are going to meet their specific realities. Because
Looks like the panel froze for a moment.
Sorry?
I'm going to jump in with another question.
Yes, right. Yeah.
I see Payne, which is, what about smaller organizations? You noted that many women's organizations are small, and for all organizations, how can we make sure that the solutions that are devised help them as well as the larger humanitarian organizations?
Yeah, I think that is exactly the reason. I mean, one of the things that we come up with is that for donors, it really means investing in longer-term funding, flexible funding, as several of the groups we interviewed, for example, are not registered. And it's not possible for them. The work that they do is very critical. It's dangerous. It's seen as dissent by their governments. So in that sense, a lot of the current rules are just not meeting their realities. So I think to come up with solutions, the things that right now are set and have been set by women's groups for a long time, give us longer term flexible core funding, because also if you don't have the core funding, you can't build up any systems to meet any requirements that people are putting at you. But I think overall they just need to be part of the tables where the solutions are being made right now, because the smaller groups, the very activist groups, the ones who are going underground, the ones who are not registered, they are the ones who are feeling this very much at this moment.
Kay, can you see Florence's typed comments? Or I can read them. She just says, our Chatham House report came out last week looking at British NGOs, which are experiencing many of the same problems. We're also interested in exploring the role of virtual currencies and fintech. Run a forum in London on this, and would be happy to chat with others about this work if there's interest. Lana has a question and would like to be unmuted, so I'm going to let her ask. Lana, go ahead.
Hi, good morning, everyone, and thank you very much for your for all the presentations. My question is really to Isabel and Jane about their reports, which is very interesting. As you know, we are at the Center for Strategic and International Studies. We are endeavor into a project about expanding the space for civil society around the world. And one of the key factors been, as you mentioned, that affecting the work of the civil society organization is mainly the reliance on foreign funds, as well as the counterterrorism measures, among others. My question is really, what differs this women organization from the larger civil society organization and make them more vulnerable to these kind of measures? That will help in terms of figuring out more of a creative solution. Thank you.
Isabel, shall I start that one?
Yeah.
Okay, so thank you for that question, Lana. And I think, picking up on what is exactly the profile of women's rights organising that makes them particularly susceptible to these impacts. So just very briefly, so small sized and often having low financial resilience, which means if you don't get the money or there's delays, that you can't do your programming. Secondly, as you just mentioned, receiving short-term project-based funding rather than multi-year core flexible funding, therefore inherently limiting compliance capacity. The third feature, you also mentioned reliant on foreign funding, thereby having transnational flows that particularly attract CTF rules. The fourth feature, women's rights groups work primarily at the grassroots level rather than in sort of national or even regional or international contexts, and so therefore are often seen as more risky. The next feature is women's groups are often new or emerging. So as Isabel mentioned, they often don't have the profile of work that would make them look like a safe partner from the outside, but again are heavily reliant upon funding to enable them to develop that profile. Another feature that I didn't mention, I'm just looking at the time, is that really the groups that we looked at already experience gendered patterns of financial exclusion in the countries in which they work. So, measures that are based on bolstering bank relationships, for example, don't take into account that sort of the gendered reality on the ground is very different. Final issues too, the insecurity. So cash carrying is inherently insecure measure. It takes on a different hue when it's women carrying cash, for example, through at-risk areas or across borders. And finally, that women work on controversial issues that require attention to the beneficiary safety and information. So women's groups are not going to give names, for example, of domestic violence victims in shelters to satisfy a donor. Those are some of the features very briefly.
Hey, we have one last question we have time for, a question about what can we do to follow up collectively and individually in our countries as civil society organizations to help address these problems. And I'll invite the panelists to comment on that before we close, but also invite civil society organizations to contact the Global NPO Coalition on FATF, which will be moving to get involved in the de-risking and financial exit issue more proactively this year. And you can contact us through the fatfplatform.org. Are there other panelists would like to comment on that?
Kay, I will add just one very brief comment, and that is there's a tendency to think that these issues are, quote, technical, and that people have to understand all of the details before they advocate. And I think the most important point here is that people inform their policymakers and the senior government representatives or banks that there's a problem. That there's a problem in terms of humanitarian and nonprofit groups being able to conduct their work, but that through appropriate means there are solutions. But it has to get out there across the board that these are important issues and problems that can and must be addressed.
Emil? Looks like
Emil,
you're still on mute, Emil.
Okay, sorry. Yes, just to add that we would very much like, I mean, as portrayed, it maybe sounded a bit America focused, but we want our work streams to eventually, encompass the problems not just in the US but elsewhere as well. So others listening from NPOs in charities, humanitarian organizations in other parts of the world, please do get in touch and share your problems with us, and we'd be very happy to make that a focus of the work streams. Thank you.
Other panelists have comments on that question?
Yeah, maybe very briefly. I think, well, what we could see, the change of recommendation 8, FATF recommendation 8, also did not come out of the blue. So I think that was the result of hard work of civil society organizations. First of all, starting to do research and trying to get evidence on what is happening. And with that information started to engage in advocacy, which ultimately has led to a change in recommendation 8. So I think what we need to do right now is is we've done this for women's rights organizations. I think there's a lot of sectors of civil society that need a similar kind of research, because I think what is really key that in whatever we say about civil society, we recognize and we investigate how it's impacting on different sectors. And from the monitoring that we do as civil society, making the research, coming up with evidence-based arguments, we can use that to come together and inform our advocacy, which we will need to do at different levels. It will need to be at financial institutional level, at a multilateral level, within our own countries who are coming up with the measures and are doing evaluations every now and then. And I think also we need to address our own civil society to be inclusive. And make sure that everybody in its diversity within civil society can help shape the solution.
Thank you very much. Any last comments from our presenters? Okay, well, with that, we will be closing. If you would like to follow up and become more involved in these issues, as I mentioned, go to www.fatfplatform.org or respond to the invitation that you received or was forwarded to you. Thank you very much for your participation. We look forward to all working together over the next few years to get this problem solved. Thank you.
Thank you so much, everyone.
Thanks, everyone.